Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Hey everyone, welcome back to a brand new episode of Broker Bulletin. I'm Clare George from LMG Commercial team, and today we have Vanessa Rader, Head of Research at rewrote. Welcome back.
Thank you.
So it is fantastic to see you again, Vanessa, but I have to start with a bit of a reality check. I was re-listening to our chat from mid-November last year, and the vibe back then was definitely one of optimism. The market was bracing for rate cuts, confidence was creeping up, and you were even eyeing off some high secondary office options in Brisbane, Sydney and Sunny Coast. Plus, we were also talking about servos and staying strong because EVs are only making up 1% of the fleet. But fast forward to mid-2026 and the landscape looks vastly different. Rate cuts have been pushed out, inflation proving sticky, and the federal budget has just dropped a bomb on the property tax structures. I get the feeling some of your sentiments may have changed by now.
Yes, it certainly has. Like when we spoke in November, we were, rate cutting cycle. Everyone was feeling like things were starting to improve. We saw a few more kind of investors get into the market. We thought that 2026 was definitely going to be a year for commercial where we saw volumes of transactions increase. And I remember doing a presentation in mid-January and we were actually still feeling really good like that. But what happened, I remember the very next day, inflation data came out and it kind of just turned immediately. So we've obviously had 3 interest rate increases this year. We've had a war going on, which has had a huge impact on the cost of goods, the cost of fuel prices, which impacts absolutely everything. So look, what can I say? So definitely changed sentiment. That cost of finance, obviously a big part of it, but I think it's more got to do with kind of global uncertainty. And when there's a lot of uncertainty and people don't know what's going to happen with interest rates as well, we have this prolonged high inflationary period. The recent data is still high, still very far away from that 2 to 3% band. And when there's uncertainty, like I said, people do sit on their hands. Funny that you mentioned the EVs though, because, EVs, they do only make up a small part of the car population, because we were talking about service stations, I think, and see how much that has changed. Still a very small part of the population, don't get me wrong. For the first time last month, I think it was, the Tesla Model Y was actually the greatest selling vehicle in the country. So for an electric vehicle to be the number 1 selling car is pretty remarkable, and it really shows how quickly the community can pivot to something different when there is that uncertainty and that kind of worry about something like as big as fuel prices, that it does turn around. And yeah, a lot of brands here, a lot of affordable cars as well. But look, I still think service stations are still going to do fine. Let's talk through some of the asset classes and things that are happening. But I think the area is uncertainty, and that's going to be sticking around for much of 2026.
Okay. So the headlines are screaming about residential changes, but you recently noted that the second half of 2026 is shaping up to be a massive shake-up for commercial. Why is the budget aimed at housing actually a huge catalyst for the commercial sector?
I suppose what really has shown us is that a lot of the changes have been taking place, and we'll probably talk about them a little bit more closely, but a lot of it's residential, obviously. And a lot of residential investors may just opt to invest in commercial instead, because a lot of those changes that don't impact the commercial sector. So not dissimilar to what we saw during COVID when interest rates were really, really low. We saw a lot of residential investors, first-time buyers, mum and dads pivot to commercial just because it seemed like a good way to diversify your portfolio. Income returns for commercial seem better, although there is risk involved, particularly in this time where for the residential market, we're probably not going to see a whole lot of capital growth, like continued growth in house prices, as we have seen in the previous years. So that pivot towards an income stream or more regular or higher returns in terms of rents may look attractive to investors in the market the second half of this year.
So let's look at negative gearing. The budget effectively quarantines rental losses on established residential property bought after budget night, meaning investors can't offset them against their salary. But commercial is left untouched. How does this change investor behaviour, do you think?
Yeah, just like I mentioned, I think that we will see I'm not sure if it's actually going to flow through. I think we will see some of it, but we definitely will have those smaller investors consider other options other than investing in residential property, unless they can get themselves a new property because the negative gearing still applies for those properties. I think that those smaller industrial is probably the best one to kind of look at. We'll see more of those kind of strata title industrial properties probably look attractive to first-time buyers. It's at a price point which is attractive. However, you have to remember, though, you can't borrow at the same capacity for commercial as you can for residential. So it's going to be up to the individual's ability to repay or what their kind of borrowing capacity is. But I think definitely we will see more people speculating in the commercial market. Industrial would be the number one thing that I'd look at because it has had the best kind of track record. But even those other smaller assets, and we mentioned service stations, but those alternative assets, service stations, childcare is doing it a bit tougher at the moment. It has to be very well located and a lot of due diligence around that. Medical, small medical, secondary office or kind of office suites. That's another one that's possible. The office market's still doing a little bit tough, and small retail. But yeah, I think industrial would be the number one pick. And I do think that we will see more investors just pivoting and looking for those opportunities.
Yeah. And what about like boarding houses, student accommodation?
They're usually much more expensive assets. So I don't think that's necessarily the right sort of price point. Some of those have you have to be very careful with those assets and just make sure that they're the right sort of asset and they still fall under a commercial classification as well, because a lot of it has to do with the zoning and it may be still considered a residential asset, so therefore not get the negative gearing. So you just have to be a little bit careful and make sure you get really good advice on those sort of assets.
Yeah, right. And I guess with commercial, just overall, the risk profile is a bit different. So you're looking at higher entry costs, longer vacancies, that sort of thing. So I guess that's something that people need to be aware of when they're trying to shift into
that's
this
right.
side.
It's a very, very different asset class. And even looking at property management fees is a really good example. They're far more expensive, but they're far more expensive because they're far harder to manage. And you may have a really good tenant in there and you've got a very long lease, but you could also kind of lose tenants and, like you said, sit on an increased vacancy period. There's incentives in the marketplace. There might be rent-free periods. There may be make good where you have to kind of do renovations or add costs to the fit out of a property. Look, there's a lot of things that aren't the norm. It's great that a lot of the tenants do pay the outgoings and those sort of things that we don't usually see in residential. There's land tax, all those sort of things are usually paid by the occupier. But look, there's a lot more to it for commercial. So you really need to have good advice, both from a lending point of view, but also for the management point of view. It is a little bit more costly, but the returns are there. You need to make sure that you really look at those kind of tenants, make sure that they've got good lease covenants and they're a secure tenant, because if you've got a good tenant, they're usually a sticky tenant. They'll stay there for a long time.
Absolutely. And when you say industrial is strong, is there a big difference across the states?
Not really. Melbourne's probably the only kind of outlier that's doing it a little tougher because overall, across the entire country, we have a issue with land supply, industrial land supply, just like we do for residential, to be completely fair. We're not building enough homes. Similarly, there's not enough industrial land out there to cater for our requirements. So most cities have very, very tight vacancy situations. So that has put pressure on rents. As we know, it's very costly to build anything at the moment as well. So that kind of existing built form industrial is probably the one that's doing the best. Our population growth continues to increase. With population growth, we need industrial. We need logistics, we need transportation, we need manufacturing. There's lots of small businesses out there that occupy these spaces, and our business numbers continue to grow as well. So there's a lot of things pointing to industrial, but overall that undersupply of industrial zoned and serviced land across most of the country would be the catalyst there.
So let's talk about capital gains tax now. So the budget replaces the 50% CGT discount with inflation-based indexation and a 30% minimum tax starting July 1, 2027. But there's no new build exemption for commercial like there is residential. What does this mean for the current commercial owners, and would you be expecting a rush on listings in the late 2026, early 2027?
Yeah, I think we have to just kind of wait and see how that plays out. I'm really not sure what the impacts of that will be on the commercial market. A lot of people that have owned their assets for a long time will probably just sit on them. There has been, just like the residential market, a lot of commercial asset classes, particularly industrial, has seen a real huge uplift in values. Look, I don't know. I don't think we are going to see a rush. Commercial is usually a pretty long-term investment play. So I think that a lot of owners that are out there, mum and dad, time investors, it's kind of that's the kids' worry further down the track.
That's true.
So, and we're in a period of time where going forward, the level of growth is probably going to be a little bit more subdued compared to previous periods. So that means that some of the capital gains based on the indexation model, because there is a line in the sand that it does move forward, is probably going to be less. It's going to be actually more an attractive option than the 50% discount. But yeah, I think that with that one, it's just more of a wait and see situation, see how we go.
Yeah. And I think there's probably an opportunity for brokers to just have a look at their portfolio as it is and speak to, work closely with accountants and potentially restructure, some of the debts that they've got in there. So I guess let's shift to what's undoubtedly the biggest news story for property investors recently. The government just struck a major deal with the Greens to completely ban SMSFs from entering a new borrowing arrangement for resi property. Crucially, again, for us, commercial property borrowing has been left entirely untouched. Given that SMSFs can no longer leverage into residential housing but can still freely borrow in the business property space, are you expecting a massive wave of capital to pivot straight into the commercial market over the next few years? Well,
I suppose there's a few things at play here. Like we mentioned negative gearing, and that's kind of pointing towards commercial, and the buying through your self-managed super fund, that might be pointing to negative to commercial property investment as well. Look, I think that a lot of buyers have purchased through their self-managed super funds commercial property in the past. That's not a new thing. I think particularly owner-occupiers, people that have small businesses and things, that will continue to look at doing that to get into the market. But we know that self-managed super funds they're quite costly to set up, and there's ongoing valuations. And so I think a lot of people may consider it and may look into it. But I think, like you said on that kind of previous point, it's so important to get really good advice and speak to accountants and things like that. Look, I think I have no doubt that it's just another reason why people will pivot into commercial if they can do it through their self-managed super fund and they can borrow through there where they, rather than residential. Yeah, and look, I think, again, an interesting one to see how it plays out, but it does point towards being a favourable piece for the commercial investment class, if you like. But again, they're complicated structures, and the brokers would know that. They probably, not sure how much they love doing SMSFs. There is a lot of costs involved with it. And while on paper, in the first instance, it looks like some good tax savings are there are a lot of costs and stuff involved with it. So, but yeah, again, it is pointing towards commercial, so a bit more inquiry, no doubt.
Look, there's some brokers out there that specialise in this, so I guess it's time for them to also pivot their revenue streams as well and look at, other sort of borrowing structures. And I think there's going to be a lot of brokers, especially the ones in the residential space, looking to, increase their commercial finance as well. So I think there's opportunity.
There is opportunity.
It's also not as simple as just stepping into that space as well.
I think that's what I was going to say. There is so much uncertainty in the market, and people I don't know if it's a new asset class they've never been involved with before, or they haven't borrowed in that space before. So opportunities to really just stay close to a lot of those people and just be giving them a lot of the information that we have out there on what's going on in the marketplace, not only just with these legislation changes, but more kind of, economic changes or what's happening just in some of these different asset classes. Because it is a moving thing, and it is a very specialised area, commercial property. So not one to kind of be jumped into or taken lightly.
Yeah, absolutely. So I guess wrapping it up, if you were a mortgage broker sitting down with the commercial client or resi investor looking to pivot this week, what single most important piece of advice would you give them?
Well, I suppose that's what I just said there, isn't it? It's being really careful with the information that you get. Be very considered on the actual asset and the longevity of that asset. Is it in a really good location? Does it have good access? What's the new supplier going to be in that local market? So your due diligence would actually be kind of the response to that, making sure those tenants are quality tenants, that they're sticky tenants that are going to be there, and have a really good property manager, I suppose, look after the property. Once you've sourced the property, you've done your homework on that particular property, the asset class, your local area. And part two to that would be then get yourself a really good property manager so you have some sort of security over, that continued cash flow. Because at the end of the day, that's what these investors are looking for. Commercial property does offer a higher cash flow. And interesting times.
Yeah, absolutely. And I guess just one quick question, with everybody sort of maybe potentially pivoting to the commercial market, surely there's a limited supply of commercial property as well. It's not like the resi side. Is that going to push up prices hugely, or?
Oh, look, I don't think so. I think that Look, location sensitive, like there will always be areas where that happens. There is a lot of commercial property on the market at the moment. Like I said, we've had a tough couple of years, so there will be opportunities out there. People perhaps moving a little bit up the risk curve. Don't forget that built form is probably king, the cost of replacement cost for a lot of these assets. So, which is then make sure you do your due diligence so you're not buying something which is going to be a bit of a white elephant, if you like. But look, we might see some developers go out there and start building a few more, I don't want to call it investor stock, but kind of smaller industrial strata facilities, which we've seen a lot of them in the past, and they continue to be really attractive because of that price point. We might see a bit more of that, but look, there is commercial space out there. There's always people looking to do transactions. So each asset class, each market will have a bit of a different result, but commercial has been doing it a little bit tough the last couple of years. So I don't think it's going to be a huge escalation in prices for a lot of these different assets. We're coming off returns that have been quite low or negative in some markets. So yeah, just wait and see.
Beautiful. Well, it looks like there's some opportunities for our brokers in the commercial space. So it might be opportune time for our brokers to connect with our, different lender panels. And there's a lot of lenders out there wanting to offer their services to clients. Yeah, so maybe get in touch with your BDMs, find out what the appetite is, and, you can shift from different lenders across the board. So that's a wrap. Thank you so much for your time. Really appreciate it, Vanessa.
Yeah, thank you.
Thanks so much for listening. If you have a topic you wish for us to discuss, please email us on Broker Bulletin at lmg.broker or DM us on Insta at lmg.broker, and our producer will make sure to answer you ASAP. If you like this episode, make sure you rate and follow us in your favourite pod store.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.